Hello there, welcome to Taking Stock. It's Tuesday, the 25th of July, 2023. Here's something depressing for you, John. 5 months till Christmas.
Thanks, Justin.
Christmas Day.
That's exactly what I need to think about at the moment.
I wonder if we'll have a Santa rally this year. We long for that. A good rally for years. In fact, I do honestly think that we're off the bottom here. I genuinely think that. It's looking good. And in fact, there's an article today we'll cover in the top business stories about saying that pretty much is recession's less likely. But first and foremost, let's look at I always like to just check out the other. Do you know what? It's like when you sort of have most of my stocks are small. I've got a fund and all that stuff, but I do find FTSE 100 companies quite boring. And it's like if you support a football team, you don't care about other teams really too much, do you? But anyway, the FTSE it's up a fifth of 1%. FTSE 250 down a little bit. So there we are.
That rides on Unilever is not too boring, I have to say. It's good news for me because it's my biggest holding.
Is it your holding? Yeah. It's nice to see that. But can you get excited about big stocks though?
I mean, it depends what you're after. I'm not necessarily after excitement. I'm after returns.
I suppose returns are exciting. I suppose a little bit.
It's done very well. It's done very well for me. Unilever. I mean, let's have a look. I mean, what have I held it for a year or so? It's up about 15-20%.
That's nice.
Yeah, it's not too bad, and it's proved very defensive, and we'll talk about its numbers in a minute. But I don't find it boring. I don't find large companies.
Yeah, I find that defensive boring. In fact, there's a story about Unilever later on. We'll cover that as well. But marvelous stuff. Let's start off with it. By the way, if you want to comment, please comment. If you can hit that subscribe button on YouTube, that'd be very good. We're nearing sort of 3,000 subscribers. It's growing nicely, steadily but nicely. So if you can hit that, if you haven't subscribed, please do that. Much appreciated. And if you have, and you want to shout out, we'll give you a shout out. It's like a radio station here. But and talking about that, a few comments yesterday. Okay, Alistair says, thank you for acknowledging that Ondo do not have funding issues, as you apparently now recognise. That's a little dig there, isn't it? As you apparently now
Subtle.
I didn't say that at all. I said I want to see the financial statements. If full year results are out this week, I want to see them.
I think what you suggested was something that many small companies have a problem with, and that is scaling up.
Exactly. The news flow is great, but it costs money to scale up, and so I want to see. I mean, the restructuring the convertible loan notes are very good. They raised money a few months back, £800,000, not enough really, plus warrants on top of that. But still, short term, you want to see how much they're burning, because they did burn about 2 million for 6 months first half. But Alistair gives us a bit of advice here. He said the key to achieving multi-bagger gains on the small number of outstanding small tech stocks is to do your research early and start building your stake before the herd arrives.
I couldn't agree more about the research part of that. I think I talked about that this week. I think you've got to be prepared to put in the legwork, dig around, triangulate. So, there's a guy called famous investor called Philip Fisher, and he advised an approach called scuttlebutt. And what that essentially meant was you go and talk to as many people as you possibly can. You find information from wherever you can get it. Suppliers, customers, employees. Not just what you hear through the RNS. And you go out and you form a picture of the company by triangulating all this information, and that's what gives you the sort of comfort factor to know that you perhaps found something that's a little bit special. So would definitely advocate lots of research. I'm not so bothered about early. I don't think getting to things early is necessarily a must. I think you can come to things quite late and still make a very, very good return. We've seen that with some of the big tech stocks over in the US.
Yeah. Well, yes. I mean, there are exceptions to this, but do you know what? I sort of agree on, if you're looking at micro caps, you have to be a little bit early, because small amount of volume can move them significantly in a short space of time. And if you and generally when I've looked for micro caps, you're talking sub 20 million IAM or nano caps. I call that nano caps now. Micro caps is a little bit above that, and nano caps can really move, and you can find some. But like I said, if you look at just the mathematics of it all, it's very easy for a company with a 5 million market cap to double to 10 million. And it gets harder and harder, of course, the bigger it gets. So that's the thing. If you want to find a multi-bagger, then you've got to sort of fish in those areas. They're higher risk, but a higher reward, but also the rises may not be sustainable because they may need funding issues, and that may take the momentum away from them.
Yeah, I mean, that's what you might refer to as the law of large numbers. But, we have seen, as I said, going back to US tech, the likes of Apple and Google and Amazon, they're multi-billion companies that have just got even bigger. So you can multi-bag from very, very large market caps for sure, but so the law of large numbers doesn't always hold true, but you've got to be in the right place.
Yeah,
and I do accept that it's very easy, much easier to do that from a very small position. But as I say, I'm just never too fussed about getting early. I'd rather see the uptrend in place before I dived into anything, and I'd rather see some solid numbers behind it. So I do appreciate the point, but it's just not the way I would approach things.
No, uptrends are very important, especially in a bear market or coming out of a bear market if we are, because you can have many sort of fake breaks and it'll come back down lower. You can do so. Momentum and uptrends are very important, and if you stick to that, and it just took me a while sort of to be disciplined enough to stick to that. By the way, Mike says yesterday, good fun. The ramper guy, that's no way to talk about John. The ramper guy always gives me a chuckle every time I watch.
Well, at least he didn't call me.
I don't think you're a ramper, John. I don't think you're a ramper.
Thanks, John.
Comment below actually. Have you ever had a multi-bagger? If you have, what was it? When was it? Or your biggest loss? What is it? Let me know. Have you ever had a multi-bagger? That means I'd say multi-bagger. Was it say 200%? Maybe that's a multi-bagger.
Yeah, 200%.
Yeah. Let me know what it is below in the comments, and also a poll before we go on. What is the best time if you're watching this on playback? What is the best time for this to go live? When can you catch up? Is it like lunchtime? Do you know too early or too late? But 12 to 1, 1 to 2. What would be the best time? It's up to you. Okay. Let's look at the front page of Vox here. We've got a bit of content, John. In fact, we've both done a bit of content there. I recorded an interview with Greg Madison of Shield Therapeutics. Good numbers in there. They're growing quarter on quarter by 50%. 15,000 prescription for Acrifer, of course, which is already taking sort of iron deficiency tablets. But they're doing very well, and they seem to be heading in the right track.
Yeah, we spoke about them the other day. It's really, really strong numbers there for that product.
Look at Brent crude. By the way, just going off piece of it here, but it's breaking above this previous support level. You can see there it was hovering around sort of $80, broken up now to 82. Now inflation numbers are looking good, but if that starts kicking up again, we're in a bit of a problem here. These are lows here down at sort of $72. Broke it above that there, and I was there. But let's have a quick look at.
Luckily, I got my heating oil in order at the bottom of that. So
you bought the low.
Buy your heating oil in summer. There's a tip for you.
Yeah. Well, that's the same thing. Are we storing gas now because it's cheap? But look at that. That's Shield Therapeutics. So you can see there, from a downtrend, massive downtrend from all the way up here, and then it's hit this level at pretty much six pence, and it's bounced on that for months, from July last year, for a year of trading in a range. You can see how people get shaken out, they get bored, and all of a sudden it's sort of broken out on that update they did last week. And so you may see the end of a downtrend there. Maybe it may take a while. I know a seller came in, I think, and let me just check that. I think there was a holdings thing yesterday, but I'm sure a big holder. So we are holdings. So who is this? This is Jupiter Fund. So they've taken a little bit off the table there, down to 4.7. So maybe that's the reason why it's come back a little bit on that. But there we are. But good news anyway. John, what have you been covering? hVIVO, isn't it? Something?
hVIVO, yeah. I spoke to Mo Khan about the latest human challenge model for influenza B. This one, it's quite interesting. Flu is as Mo told me, it's an intelligent virus. Constantly mutating. It's very, very hard. Or we as a society have found it very, very hard, and the pharmaceutical industry to develop vaccines that certainly not universal vaccines. And it's very hard. There's different forms of flu: influenza A, influenza B, and this one's it's very hard to distinguish between the two in a sort of live environment. So the human challenge model is designed to really help them target this very, very specific strain of flu, influenza B. It's the only way you can really do it. And it's, it's a huge contract. It's 13 a bit million.
Well, I was going to say, it's actually risen by more than that.
That would be nice. Over the next couple of years, recognised over the next couple of years, and with an existing client. And I think that's a very important fact. As Mo told me, not only are clients coming back who they're working with, but the contracts are getting bigger. And I think this really sort of speaks volumes about the approach that hVIVO is taking. The industry is really recognizing that the power of these human challenge models to help them accelerate the development of treatments, vaccines, or antivirals. And in many cases, a lot of the things that it's developing these models for, there aren't really any effective treatments. So really, really, really important stuff that's going on here. Have a look at the interview, and there's an article up on the site as well. But yeah, it's really, really good news for the company. Shares up a little bit. I must say at this point that whilst I like large companies, I do like this company, and I hold a few shares.
Oh, there we are. There's transparency, bit of disclosure there.
Right, you've got to be transparent.
Yeah. Well, I'm going to talk about a company I hold. There's no secret to that, though. According to Mike and the Ramper, I haven't ramped anything. Have I really? You haven't said anything yet.
No, I really don't think when I say I like this company, that I'm in ramping territory here because I own them. But you just look at the numbers. Order book last year's 76 million. Huge amounts of cash in the bank, and really very much approaching profitability. It's obviously taken a. What are we looking at? So I'm just having a look at the forecasts.
Just look at the chart there. You've got the forecast. Look at the chart here. You see it's sort of wedged here, but you see the bouncing. It's hit the top of the frame. It's coming down. But it's staying above the 200-day moving average, which is quite nice. Dip below there, and now it's pumped above the 50-day moving average. But what I look for that is basically a previous high. Is it beating the previous high? It needs to get above these previous highs, hopefully. But it seems to be it's settling down almost. You can see a series of higher lows a little bit here. And so, it needs to consolidate. But
no, proper company. Been on the cusp of a pre-tax profit for a couple of years. That's it's kind of measure I like to use as a marker of profitability. But next year, looking at these forecasts, pre-tax 5.5 near enough. Sorry, 6 in fact. EPS 0.8p. So we're looking at some serious growth here.
Yeah. So
and they're not hugely expensive.
107 million, is it?
Yeah.
Oh, okay. So it's getting to a small cap territory. Okay, cool. So that's hVIVO.
But sorry, just to add, there's one other company that we're having a look at the moment. It's not the article's not been published yet, but it's called Diaceutics.
Right.
And they've had a very strong trading update out today. Shares up about 6 and a bit %. And this basically provides sort of back end technology for the sort of aggregation of diagnostic results, and it's really important, used by lots of big pharma clients, and really again this is all about this sort of data coming in that can then power the industry, power their give them more and more knowledge, and then overlaying that with sort of technology such as artificial intelligence to really power that analysis. Things
what they called again?
Diaceutics. Ticker is DXR.
Diaceutics. Okay.
Yeah.
So,
what I like about these sort of companies is that I call them picks and shovels. So obviously you can invest in companies that are developing the drugs themselves, or you can invest in companies, and this is what I would prefer to do, that are actually providing the tools that companies use to make to develop these drugs. And it's in my little basket of healthcare picks and shovels. This is definitely worth another look.
Picks and shovels are really they are more stable and more visibility of earnings because there's always the industry there. But that suits you, John. Actually, sensible.
Boring.
John, picks and shovels. No, I'll just say, no, they're sensible because they're always going to be needed. It's like going back to the old gold rush days. They said the people that really got well off there consistently were the guys with the stores selling all the equipment. When very few people actually struck gold. But if you're selling the equipment to all those people who are, I'm going to get rich, and that's a bit like AIM, really. It's it is a lot of people going to AIM, look for these sexy breakneck stocks, but end up breaking the bank. And you realize if you have a sensible backbone to your portfolio, you probably do a lot better. And if you get the odd winner, one or two winners on micro caps, nano caps, then that'll add to it.
Yeah.
But it's a hard game. Okay, so winners. Paul Pharma, I don't know. I interviewed Nigel on the podcast a long time ago, but basically a patent grant and board change there, and the University of Queensland has informed the company that has now been notified by the US patent attorney of the grant of its further patent application in relation to Nuvec in the United States. So there we go. I mean, in fact, it's a bit of it's one of the winners today. But let's look at the chart on this, because I can imagine this is a bit volatile. This is one of these. It's well followed, this company, and so you can see there. There's amazing. This is a typical example. Amazing rallies in this. Going from literally 1.4 up to 3.5. That's a multi-bagger right there. But then all of a sudden, a couple months later, it's almost back to 1.4 again. So you've got to be careful in those. You can have big rises, but are they sustainable? And so you can see that's from an all-time low, pretty much. So this rally today is up 34%. It's from an all-time low, but so it is hard to see it. Losers, WANdisco. Now, in the comments, please, what does this company do? Do you hold any shares in it? And when did you buy the shares? Because literally, they've restoration to AIM. Let's look at the chart on this, because they were when they were suspended, because one of the sales executives.
It's quite a chart. This.
Exaggerate. So look at that. When they're suspended, which is up here at 13 quid. What was it? One of the sales execs exaggerating the figures or something?
It was something like that. Yeah. It was something like that.
And now down this red dot down here, that's where they've opened today. So from £13 to 50 pence, and they've raised $30 million at 50 pence.
We knew that was happening. We spoke about that maybe last week, and we knew this horrendous chart was on the way. People seem to be buying today. Some people seem to be buying. I mean,
you're averaging down, hopefully, but it's nuts. Look at that. The rise, the volume wasn't huge, but look at the big volume before. On the day 25th of, that's today's volume. Yeah, so buys and sells, massive volume today, 4.6 million. But WANdisco. So, do we know what they do? It's big data, isn't it?
It's data. It's data. So my understanding was that companies, have multiple instances of data servers, whatever around the world, or certainly within the cloud now, and it's just making sure that everything is sort of synced. So it's if I post something, here, it's syncing with all my devices over there. I, as I said the other day, I don't fully understand why there is a separate space in the market for this company. You would have thought this was something that the cloud developers were doing for themselves, but I just it's a disaster zone. I mean, they announced the contract the other week for $7,500. It's like, wow. Why are we announcing this?
Because they were valued something over $1 billion, wasn't it, at one point? Or was it close to $1 billion? I think it was. In fact, it was 900 million pretty much. And I didn't get the valuation. I was asked to look at these and do a few months back and say, can you look at WANdisco because it's rising? And you notice that the interest in companies rise with the share price. And so doing research and getting early is a good thing, but after it's risen by several 100%, you think, is it worth it now? But it's always worth having a look, because it may still be undervalued. But I didn't see any value in this at all, and I thought, what the heck? I don't understand it. But I still understand that this cloud, that cloud, multiple clouds you choose. At WANdisco, we make it easy for you to move petabytes of data in record time to or between any cloud, anytime you want, with zero downtime. How big a market is that?
Well, I mean, data is huge. I mean, the world is powered
by
data.
Why do you want to move it between the clouds? If you got your business account with, for example, Amazon, AWS, or whatever, why would you need to move it between the clouds so often? I don't understand.
What I would say is that despite the fact that the cloud exists, there are a lot of legacy systems out there.
I suppose so. Yeah.
Managing data and making sure, as I said, that data is always synced is very important.
And
it's what this company, as I understood it, was doing.
They were one of the originals of that, though, weren't they? They were big data, and then get the clouds and all this. They saw, that the power of big data, I suppose, in the AIM area, in the small cap area. But if anyone's watching this and exactly, in fact, in a sentence, sell it to me, because to me, on the front page of their website, I still don't get it. And I think if you can't sell a business, in a sentence, I don't, it's hard to understand. If you can't make someone understand it, how do they? Maybe that's part of the appeal. It's a little bit too erudite to. So anyway,
I can't remember. There's a famous investor. I can't remember who exactly it is. I'm not sure it is Warren Buffett, but he just said, if you can't explain a business in one line, then avoid.
But but you know what I'm amazed at? Apart from investing, I think Buffett and Munger should just release books on quotes. I don't know if they're all attributed to them. I don't know if they are theirs, but some of the quotes are amazing.
You just go and read. Just go and read their letters. Their annual Berkshire Hathaway shareholder letters. They're all online, and they are a fascinating read. You can learn incredible amounts from them. And then obviously people have gone away and written books analysing all those letters. You can read those as well.
Made money off those.
No, exactly. But just read the letters. They're mind blowing.
Yeah, so the one thing that sticks out to me is about investing and difficulty investing. And I don't know which one to say, Munger or Buffett, but say, investing is not like Olympic diving. You don't get points for difficulty. Keep it simple. So if you see companies, if can't understand it, it's too complex, then move on. There's plenty of other opportunities out there. So most followed companies. Here we go. A bit of Mike, a bit of ramping for you. I hold this stock. I've held it for a while. I don't know what ramping is. If you share, I posted this video about the new CEO of Destiny's Pharma, and someone said, "Does any old ramps come to fruition?" I thought, "What are you talking about, ramps? I'm sharing information. If there's anything in that video that isn't factual, point it out to me, because I'm not ramping. Every forecast is by the broker. Everything I've covered in there is factual. So it's not like." So it's just sharing information, and people say, "Oh, don't." But anyway, this is obviously a new CEO was promoted. They've got some of the big guns in there. These guys have got a lot of experience for a sort of 30 million market cap company, and that's because the assets are very good. I do believe that. Like I said, new chairman, or he's a returning chairman, many years ago, he invested in this company, Sir Nigel Rudd. And if you read about him, there's a lot of criticism about him online, but because he's quite ruthless and he gets deals done. And he's done lots of deals. He's been a deputy chairman of Barclays Bank. He's running Heathrow. So big companies he's run. He's worth apparently he's worth about 70 million. But he does boast a bit. And he said, "I've never, ever left a chairman position where the share price has been lower than when I started." And he said here, and he said here basically that there's $2 billion of value in XF73 alone. That's their second asset, their wholly owned asset. They've already done deal on one. And so I just think it's very impressive. Him and Chris Tovey, the new CEO, who's Chief Operating Officer of Pharma, taken over by Jazz Pharmaceuticals for 7.2 billion. And every company he's worked for has been a multi-billion pound biotech company, and he's operated at high levels from GSK to UCB. They're all big companies, and now he's the CEO, and you've got this chairman as well. Those are two very big guns for a micro cap stock. And I think there's only one reason why that's there. It's not because they're getting paid a lot of money there, because the company hasn't got a lot of money. It's because the assets. They believe in the assets, and I think they're going to there's lots of potential there.
There was a very interesting observation I saw from a guy called Justin Urquhart Stewart, who I'm sure most of our listeners will be aware of. He said, Sir Nigel Rudd basically takes up roles at businesses where he can pick up significant shareholdings, which will give him a windfall. His track record has been gaining the chairmanship of businesses where there's likely to be a corporate action, usually a sale, which means he'll be a swift beneficiary. Quite often you'll see there's a lightning rod for corporate transactions to be carried out. So there you go.
Yeah. And he did, Justin did want to criticize him, saying almost he goes in there too fast and tries things out too fast. But to be honest, Destiny Pharma, the reason why the last CEO went, I think, is because the share price hit an all-time low. And things were getting done, but the share price wasn't reacting, partly because of the bear market, I suppose. But I think now with this big asset, their biggest asset, they want to get a proper deal done and not get shortchanged on it. So they bring in two guys in with huge amount of experience who are not going to get pushed around in the boardroom, or are quite confident getting it done.
Yeah.
But anyway, most read RNS is from Greatland Gold. Have you had any dealings with Greatland Gold? John, it's not your area, really, is it?
I haven't. Gold is interesting. Gold is interesting. With I wrote something about it the other day for a freelance job, but it's done well. Have you got the gold price? Now, so you look at that. Okay,
no, that's Greatland gold. But let me get the gold price up here. Hang on a sec. Commodities, where is it? There we go.
So you've got this very strange situation at the moment where the gold price is rising and gold miners are falling.
Yeah.
And gold is for whether some people love gold. It's the ultimate safe haven. Protects from inflation, protects from the ongoing debasement of fiat currencies. It's been a store of value for thousands and thousands of years. There is a strong argument that as portfolio ballast, I talked about this the other day in respect of sort of large caps, but actually portfolio ballast, just to sort of, what did I write in the piece? Imagine your portfolio is a boat and you're in a stormy sea, and the gold is your ballast that sort of holds the ship steady when seas are rough. You can't be in growth because the winds are too strong. So there's always a case for owning gold. It's just very strange that gold miners are performing so badly. I can only think it's down to cost and inflation. The production costs are sort of
that's about where all-in sustaining costs around about I'm generalizing here, I think, but all-in sustaining costs from a lot of gold miners is around about $1,000, isn't it? So and more than that actually sometimes. So So, but at this level, there still should be good margin. It can be 1,500, depends how efficient you are. But if you're a low, cost producer, it shouldn't be a problem because, we are at close to pretty much highs here. The last, has it been high? Well, back in 2011, it's almost a lag. It did rally. Someone said something like gold of the day, and it made a lot of sense about it doesn't rally on the worry of low interest rates. It's a devaluation of everything else. I don't know what it was, but it's very intelligent.
Yeah, that makes sense.
It's so intelligent, it can't stay in my head.
You think you can make the case for owning gold whether we're in an inflationary environment or a low inflation environment, because gold obviously doesn't pay a coupon. Yeah. There's no dividends. There's no income to be had from gold, and therefore, when interest rates are high, the case, and on essentially risk-free assets like government bonds, then there's no point owning gold, because gold isn't paying a coupon. A risk-free government bond is paying you 5 or 6%.
Again, Buffett said he doesn't. Buffett's not a big fan of gold, is he?
Well, Buffett doesn't like gold because he calls it unproductive, and this is true. Yeah. Gold isn't like an equity. It's not creating value by creating products or services. There's no compounding effect behind it. And actually, if you look over very long periods, say 100 odd years, gold has underperformed, stocks by quite a significant percent. But actually, if you look at a more recent history, gold and equities are not too far apart. And a lot of people put this down to the fact that, since the US came off the gold standard in the early 70s, you've basically opened a door for volatility in financial markets, complexity. And with that complexity comes the risk of further volatility. Therefore, owning gold is essentially your safe haven from that.
Yeah, can I say, I love analogies, right? But if you're in a boat in stormy seas, I wouldn't want to have a lot of gold on board. It's quite heavy.
Well, that's the point. No, that's the point.
It'd sink the boat.
No, it wouldn't sink the boat. That's physics. It wouldn't sink the boat. It stops the boat rocking. Anyway, I'm not going to get into sailing.
All right. So this Greatland Gold, it's always been a bit of hype around this. The RNS is, there's certain companies, because they've rallied strongly in the past, that they've well followed, and a lot of people have bought into them, and a lot of people maybe underwater them, but still hold the hope that'll get back to previous highs. Greatland Gold is one of those. It may get back to previous highs, but hVIVO is the thing that was, basically kicked off all the excitement. But as you can see here, when you get a company go from literally 1.4 pence up to 37 pence, it garners a lot of interest because it's a kind of, wealth creating stock. You can do very well if you manage to get in down here at these levels when news came out and rode it up. I don't know if anyone does really, but if you manage to do that, then you've done very well. But look at where it's gone back since. It's literally at 38 quid. It's now back to 7 quid.
It's that period in late 2020 was a very, very strange time.
Yeah.
On the market, there was a lot of there was a lot of money floating around because people were being furloughed and not able to spend anything. So a lot of money did find its way into the markets. That was particularly true in the US. So I know we want to see the history of these things, but that period, I think you can almost discount it from history. It's just so strange.
Right, so I put an alert on Greatland goes. In my mind, it's got to close significantly above 9 pence. Maybe even, let's move that up a bit actually. When it starts to get above, it's only 7 now. Of course, it'll be a good rally. There's a spike there, look, above 9.3 pretty much. A spike there, hasn't got above that. If it gets above that, then a new trend will start. May take a while, but
I mean, really, that's just needs to get some gold out the ground, doesn't it?
Yeah, exactly.
Basically.
Yeah. So essentially, in Scallywag, the exploration and hVIVO development update. So Scallywag is the exploration. I think diamond drilling has been completed. But in hVIVO, decline development, significant progress continues with total development to date now at 2,500 meters. We've covered that, hVIVO. Let's look at some of the business stories here. So we said about Unilever and Marmite's makers' profits soar as regulator looks for evidence of grocery greed. The company behind many popular consumer brands, including Marmite Magnum Ice, the surge in profits. They've also included Domestos, Hellmann's, but they reported a 20% rise in net profits of 3.9 billion euros, and the first half, and this is the first half. It's amazing, is it? Selling all those kind of brands that can amass that kind of net profit, 3.1 in 6 months.
Yeah,
selling Marmite and Mag, I think a lot more, of course. Underlying price growth for the second quarter was 9.4%, while underlying sales volumes fell. So hang on a sec.
This is quite interesting. This is the interesting bit. So basically, the growth has come through price. It's been able to put its prices up. It's done that, a couple of times now. But what we look for in large companies like this, large consumer goods companies, their ability to pass those price increases on without losing volume.
The ability to secretly rip off consumers and pretend they're not doing greedflation. Is that right?
Well, I mean, maybe. But
you know what?
I have to say, a tub of Ben and Jerry's is pretty punchy, about over £5 a lot of the time. So but it's great margin stuff, and these brands, people want them.
They said their margins hadn't grown, but the net profits got reported like 20% rise in net profits. So they're from 3.9. In fact, so hang on. So the margins, it's all about this. So that's so Sky here, but and they say their margins. Where is it? Well, the margin must have done better. They, is it? Oh, I don't know. Can you see margins there? Margins.
No, it's
underlying operating margin stood at 7. Oh, there we are. So the margins hasn't changed at all.
Yeah, but their top line's grown. So they've successfully passed price increases on and a little bit more. So there you go, regulators. There's a little bit of evidence, but this is what these companies are supposed to do. I mean, their primary responsibility is not to their customer who's buying a tub of Ben and Jerry's. It's to me, the shareholders. Yeah, this is the way shareholder capitalism works. They're doing their job. Their responsibility under the law is to put their shareholders first.
I like. Do you know what I like?
It's true.
I know. But what I like is that on one hand, people shouting, "Oh, you're putting your prices up. Greedflation." I think, well, do you own some shares in Unilever? Yes. Well, shut up then.
Yeah. Well, but the thing is, I'm not saying this is right, and I do actually think.
But I do quite enjoy it. I'm up 15%. Says John.
Yeah, but this is the way shareholder capitalism works. This is what it is about. And if anyone's got a problem with that, then then that's a question for politicians, and not Unilever. This is what its management are paid to do.
Here we go. This is from City AM. Okay, UK recession risk just got a whole lot lower after inflation undershot, and it's first time the ONS calculations have been undershot analyst forecasts since January's numbers. In fact, just 6 of the last 18 inflation prints have come in lower than market expectations, according to calculations by investors. But they're saying, essentially, like I said yesterday, we're seeing now bad news is actually good for the market, because this bad news particularly is about slowing economy. And we know the markets are priced in, a sort of recession, and also we've got high interest rates. So the Bank of England now is saying, okay, listen, it's working. What we're doing is working. Let's pause a little. Let's see what's going to happen. Is it tomorrow or Thursday? Thursday, we've got I think data out, haven't we, on the thing. We'll see what's going to happen, and will they push interest rates up? Because if it's starting to work, and this is first real evidence that it's starting to work, maybe they won't. So that means it's good for the markets. All the markets need to know, is inflation not getting worse? And if it's not, then the Bank of England won't have to force up interest rates any further, which of course is good for the market. And again, look at this: O2, Virgin laying off more jobs, and of course that'll feed into the economy, less people spending, and it's slowing down a bit. But it's just, I think, we have to realise the difference between the economy and the market. And bad news at the moment, economically, is good news for the market.
Yeah, telecoms is a tough old market anyway. There's a lot of big changes going on there, a lot of consolidation. I think Vodafone in the UK is teaming up with Three. Their numbers last week they weren't wonderful, but the market sort of seems to like them. The job losses are, a lot of those I think are pre-planned. BT said the same, big numbers of jobs coming out of BT, but a lot of those are to do with the coming to an end of its fibre rollout. Right. Telecoms.
Okay,
I don't really like this market.
No, I mean, okay, so that's it. We're just looking at the sort of most followed there, most read. You got each review. U Group doing very well again. Very good growth there from U Group, and that's amazing stock. Look at the chart of that. Bond Hill was just a holdings company. Pharma, a bit of a fundraise. Losers here. It's got to be WANdisco. Brighton.
EQTEQ there is doing nicely. We've got a nice little trading update out today, or sorry, contract announced today. Really interesting. Definitely worth a look. It's sort of energy from waste. So nicely in the sort of renewables theme. There's a couple of companies that I also noticed that I'm going to be taking a look at very shortly. Pebble and Aptitude. And this sort of follows hot on the heels of the S4 capital profit warning. We talked about how marketing budgets were under a little bit of pressure, and especially digital marketing budgets. These companies do, promotional products. Your logo on this mug type thing. And this market, I find it extraordinary. There never seems to be any let up in demand for people who want to put their logo on a mug or a pen or a stress ball or whatever it is. And both.
Well, I suppose that's a cheaper way. Is it the cheaper way of marketing yourselves and promoting yourselves as opposed to taking out big adverts, digital advertising, all that stuff? It's maybe a better way of doing it, a more effective way of doing it. A mug. If you give someone a nice mug with your logo on it or pens, they'll have it for 6 months, 12 months, whatever. A mug for maybe a year or so. I think it's a promotional gift that keeps on giving.
I think it's worth a look, and I say that because I look across the market, and there's a company called 4imprint. It's quite a big company now. It's one I call is $1 billion market cap, and again, it's in the promotional products space. And this company's performance over the years, take the COVID aberration aside, it is a straight line up of sales and profits. Promotional products, that's where it's at when it comes to marketing.
Well, we need to get some mugs off them. So we're sitting here drinking mugs and stuff.
Get some swag. We need some merch for the show.
Yeah, marvelous stuff. I tried to get down to half an hour, but didn't manage to do it. It's John's fault. He talks too much. Speak tomorrow. Let's take a stock. Thanks for tuning in. And like I said, let us know if you're watching this on catch up. What time would you prefer it live? Because we're thinking 11 is quite an awkward time, but is lunchtime better? Let us know in the comments. Cheers. Thanks so much.
Speak
next week. Speak